Everybody, morning. Rob, Mark, Don, Darren, Donald, Ivan, Frank, Jerry, Craig, General Rush. Good to see you, sir. Mary, Diane, Scott, Aki, Kevin, Ted, Alan, Cliff, Will, Mad, Rongimer, Sergio, Pauline, and all my other channel subscribers like Nikki K, Doug, AT, Francois, Larry. Good to see everybody this morning. And there it is right there. We actually came in low, so we got a pop right there. We came in slightly below the estimate. That's great, right? Getting closer to 2%, so we can cut the rates all the way back down to 0. Not going to happen. So even if that's the thought process, I doubt we're going back to 0. We've got this debt problem. In case you haven't seen, the only solution for that is to inflate that debt away. So we've got a problem on our hands. How do we fix it? How do we fix $37 trillion of debt? In case you didn't notice, this right here, this is one of those things you oughta, like, usdebtclock.org. Go check it out right there. $37 trillion. Yeah, you can see it up over my head there. That's just nuts right there. That's nuts. The Doge clock. They're saying saving us $500 billion potentially. I don't know if that's realized savings or not, but seems like a drop in the bucket. When you look at this, $323,000 per taxpayer national debt. I don't know about you. I don't know $300,000 on anything, but apparently I owe it on the national debt. Oh, good grief, man. This is an unsustainable problem. It's going to be a problem. It's going to cause chaos in the market one of these days. I kind of think it's going to happen sooner than later. That's what I'm afraid of. That's what I'm afraid of right there. Revenue percent. Look at this. Debt per citizen, revenue per citizen. Talk about can't balance the budget right there. I firmly believe that we shouldn't pass any kind of spending bill that raises the debt $5 trillion. But CPI apparently coming down though. Prices easing up a little bit maybe. We've got PPI coming out tomorrow. That doesn't have as big impact on the market, but it does tend to lead 6 weeks to 3 months. It's kind of variable. The average is about 6 weeks, but sometimes it's out 6 months. We get a pop in PPI, and then it shows up in CPI. It does take a while for the producer prices to trickle down. I mean, you got contracts and you got all sorts of things. So we'll see. And as far as how to get the year over year on PPI, TradingView is the way I know how to do it at this point. The easiest way. You just click the calendar button that's on the right-hand bar over there, and then we'll get that PPI tomorrow. Excluding food, energy. Yeah, we can come down here and look at today's and see what kind of craziness they have in here. Where is it? Yeah, June 11th. I guess maybe I need to reload. Not loading the data. There we go. Inflation 2.4. They didn't have all the X stuff in here. Core inflation 2.8. And that's what's scary right there. Core 2.8 versus the entirety 2.4. But that did come out in below 2.9 that they were forecasting. So good, bad, I don't know. I think it's all bullshit, all made up. Let me know what you think in the chat or in the comments down below. Moving on. Hey, Gustavo, Ray, Jan, B. Good to see everybody this morning. Don't have a big monologue because CPI, well, leading to a pop. The thing is this going to break us out? We've been kind of watching this right here. We hit those targets. Now we've been talking about that. We needed to reach up, hit this target right up here. Spiked it. Turned into little sour grapes here. But the grind higher will continue until morale improves, I guess. Next level up, if we're going higher, right there, 6104. And this has been, golly, we popped up in this vicinity all the way back over here. I don't even remember. Yeah, right back in there. And we've just been on a grind higher since May 19th. I mean, just been grinding. You know, this dip. The dips are getting smaller. And the extensions are, you know, not getting bigger here. It's just been a grind. It's kind of a triangle. Running out of steam here. You know what happens at the end of this? That's what happens. So, gosh. I don't like this. Some people say, oh, it's a breakout. Be careful, that might be a fake out right there. Might be a fake out. Say, when am I going to believe it's going higher? Nothing big picture has fundamentally changed for me. This, even if we go higher high here, it basically completes the 2007 pattern that I've been talking about. And then I'm on full red alert, watch out. And this won't happen fast. Like, it'll be a big, deep, like something's going to blow out. That's the problem here. It's like who knew Lehman Brothers was going to be a problem before? I mean, we've got lots of underlying problems right now. Number one being $37 trillion of debt that nobody's taking seriously. And we've got refinancing of that debt built on a house of cards. You'd be like, oh, you know, no big deal. It's always we're always going to be the world reserve currency. Complacency breeds big problems. All right. We are complacent. We being the people of the United States, you know, thinking that our crap doesn't stink and there's, you know, no other worldwide solutions. In fact, Goose yesterday says, you know, if we lose world reserve currency status, what becomes the world currency? Like, you know, there's no other one that could take over. It's like, that's complacency though. Like, nobody thought the US dollar was going to take over as the world reserve currency, but it did. And now what happens? So we've got this high right up here, 61.45. If we can bust it, hey, new all-time high. But that also completes that 2007 pattern. If you have no idea what I'm talking about, maybe you're new here, check this out right here. Check this out. Check this pattern out right here. We haven't done a pullback. I'm going to take, let's go to a clean chart. It makes it a little easier so I don't have to remove a bunch of stuff. So this right here that we have cooking, if we go up to a weekly chart, right here, I've got this handy dandy. This is the 2007 pattern, all right? I went and screenshotted it. Look at this. Look at this. Look how similar that looks like. We even did the little... If you don't think we do, like, these patterns are real, look at this. Look how similar this is. Even has the green little consolidation right there before we did the final flush out. We came up, you know, it has a little, this is a 3-day chart on this side over here. This screenshot is a 3-day chart. This is a weekly chart. Came up, look, we did this little, you know, we got a little red one in here. Instead of having a big green candle, we just gapped up. A few more candles. Run it to the top. 1, 2, 3. Could go 4, 5. You know, it could be 2 weeks out from making the high up here. But you know what happened? You know what happened right here? Right there. You know what happened? Right there. We went down 57% in the market. The market went down 57%. If you're like, nah, I don't believe that. I don't believe that. It's right here. That little high that I was just showing you was right there on a 3-day chart. Wow, lots of stuff cooking today. Pull back, pull back, pull back, pull back. Look right here. Look at this. Look how freaking similar this is. Look. See that right there? That dip. Run back. We're like right in here. Grinding, grinding. If we spike a new high, look at what we might be setting up. I mean, who thought housing was really a problem? Like, everybody thought it was going to keep going. Like, it did slow down. Right now, housing slowed down. Right? We've got a shortage, but nobody's building because nobody's buying. Can we see housing problem 2.0? Yeah, you betcha. Look at that. Complacency breeds big losses. 57% down right there. You don't think we can do 57% down again? I got news for you. Oh, look at that. PLTR hitting the target. Beautiful. 57% down right now. This is where it gets really scary. Scaring myself here. Look at this. 57% down puts us down at 2,600. If we were to do something bigger, since it's a bigger picture, maybe 61.8 retrace. Maybe down at 2,400, maybe 78.6. Ooh, that's where it gets nasty. We push the limits, 78.6. Talking about 1,300. People are like, no way. Look, it just takes back the last. Just takes back the last 15 years. You don't think we can do that? Oh, we come too far, too fast. That one right there took back 10 years. This one could take back 15 years. Pretty easy. I haven't done one of these in a while. Isn't that interesting right there? Look at that. We do a consolidation. We do a leg higher. Do a consolidation. Do a leg higher. Do a consolidation. Do a leg higher. Look at that. We're right at the... This is the same... Like we climbed from this consolidation to this consolidation. Climbed from this consolidation up to this consolidation. Went a little higher. And now we've climbed from this consolidation to potentially this consolidation. Be careful. And this one's bigger, so it could go deeper. Definitely could go deeper. Just warning everybody. Why am I so concerned? And debt and housing are the same deal. It's not a problem until it's a problem. I mean, that's everything, right? Like, everything's fine until it's not fine. Like, that's the whole point in the market. Like, there are structural problems right now. Like, we've not had interest rates going this crazy. We've not had this few houses. Look at this mortgage rate thing. This isn't coming back down. Even if they cut rates, this is unlikely to go back down. I saw a great explanation on why this is tied to the 10-year, not to the 30-year. I've been having a hard time kind of wrapping my head around why the 30-year mortgage rate is tied to the 10-year. It's because the average homeowner or the average home buyer only stays in the house for 10 years on average. So this exposure, when somebody buys a 30-year mortgage, it's unlikely that they're going to stay in that house on average till the maturity. It's unlikely this will be paid in full. So they put a premium. So it's tied to the 10-year basically with a premium, with a buyer's premium added on of 2 to 3. It's been historically it runs 2%. Currently it's running 3% because the default risk is high right now. So when we look at the DGS 10, I think it is. So we look at that DGS 10. Usually I'm looking at DGS 2, but DGS 10 right here, hanging out at 4.5. So that US 30-year mortgage rate, and it's actually got, so 4.5, 6.5, 6.8. So, yeah, running 2.3% higher right now. And that's a 5 up right there. Look, 1, 2, 3, 4, 5. Potential retrace to the bottom of the 4. We might go even higher. So I've explained how these right here, when the government's trying to sell debt and nobody wants to buy the debt, it's kind of like they talk about bond auctions and stuff like that. These things go higher when there's nobody willing to take the debt. What if all of a sudden that nobody at all wants to take the debt except the Treasury itself? I mean, that just could lead to a debt explosion. And if this 10-year keeps ripping, that leads to maybe something like this again, where the mortgage rate's 18 to 20%. And that just crushes the, oops. YMR, not YRM. This crushes the hopes and dreams of buyers when we do that. This thing could be ridiculously high. You know who holds mortgages? Who holds the majority or a large portion of mortgages? They talk about, the Fed buys mortgage-backed securities, blah, blah, blah. China buys the majority of the mortgage-backed securities in the United States. They don't hold our public debt. They hold our private mortgage debt. They want to own the United States when we default. There you go. There you go. It's craziness. If you've never thought of this stuff, check it out. Just go look at some of these numbers. It's absolutely crazy. This U.S. population not growing nearly as fast as we used to. 341 million people. Of that, taxpayers is only 112. When they say pay your fair share, yeah, we have a lot of kids and retirees, but there's only 112 million people paying taxes. 113, well, round up, 113 million out of 341 million people. Seems like Not everybody's paying their fair share. I think a flat rate would be a pretty fair share. The bottom 50% doesn't pay hardly any taxes at all. Seems like that's not as fair too. I've always thought that like being on the bottom, I was at the bottom. Like I speak about this. Like I used to not make any money. I came up, my family not making money. I used to get 15% of my yearly money. Just, you look at the whole money, not just income, whatever, but whole money. 15% of that used to come from basically reverse taxes. Like all the refundable tax credits that you could get, like child tax credits and stuff like that. 15% of my total money at the end of the year used to come from the government when I'd file my taxes. That's just crazy. And it wasn't because I was like, on food stamps or anything like that. I didn't qualify for any of that stuff. It's just a normal income, earned income credits, child tax credits, and all this stuff, savers credits, all refundable. And yeah, just absolute craziness. So that happens in the bottom 50%. But I quickly have paid back as I've gotten better at trading. I've quickly paid back more and more of that. Speaking of trading, here's my 50K challenge. So far for the 3 months, we're up $5,000. We're trying to get this 1 month to 50K. Right now, we're at about 2.5K. It was well over 3K. Then it drops. The month keeps sliding forward. I haven't booked any more profit in a few days. We'll go look at the 3 month here. Look at the performance. I need to look at the profit here. That's how we've been going. Stair stepping it up. That's weird. I guess I'll book some more and it'll pop in here, but it's however they reconcile this. They pick up the close dates weird. It's like they pick up the order dates, not the actual date when the trade closes. It's kind of odd. So anyway, I don't know. I don't run K-Info, but it does verify every trade. So they're all verified. They're all in here. May not be the exact proper dates, but they're all in here. And 3 months. So this number, instead of being 5K, the goal when I'm complete on this challenge, this will be like 150K. On the 3 month, 6 month will be 50 times 6, 300K. The 1 year, that'll be where it gets really spicy, like 600K. Although I just need 6 months of 50K to complete the challenge, but the 1 year will basically be 600K. Be nice. The all-time will probably be in the millions by the time I get there. Probably gonna take me like 5 years. I was actually using a calculator tool yesterday that agreed it was basically a 5 to 6 year before I hit this goal. So if you want more info on that, links, I got info in the description, but I'll throw this in here too. Right there. So there we go. Oh, cool. Do an upgrade. Freaking thing, man. All right. How do we make money today? All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument or any financial product, including don't buy stuff from me unless you trust me. Don't buy stuff from other gurus. Just don't believe snake oil sales presentations promising big gains. They almost never go through the losses. Even my presentations, the copywriter's like, people won't buy if you go through the losses. So it's designed, sales presentations are designed around invoking emotion in you to get you to buy. Just keep that in mind when you watch one. And, don't buy unless you trust the person that's selling. If you desire personal financial advice, hire and consult a financial advisor. But, be careful when you trade stocks, options, bonds, forex, futures, cryptos, treasuries, bonds. You can lose money buying or selling them. All trading involves substantial risk of loss. People are like, treasuries? Yeah, look at this. I mean, treasuries have significant risk of loss. We've talked about that lately, how they are talking about doing the zero coupon, 100-year zero coupon bonds. Dangerous game. Dangerous game. So we're already popped up here. We didn't quite hit that 60-60 target that I talked about for a couple of days now. Didn't quite reach it. We may reach up here before we hit the top. At least this local top. I would love to not break out to a new high right now. I would love to break that pattern that I was showing off a minute ago. I would love to break this pattern, not do this. I don't want to do this. I would love to do a nice big fat deep retrace right now, possibly even up to 800 point retrace. I would love to see that in the market. Nice big fat deep retrace that would break that 2007 pattern and set us up to potentially go higher, well up into the 6,600 area. That's what I want to see. If we just go popping out right now, really, really, really sets the stage for a big, deep correction. S5TW, stocks above their 20-day. Let's check in on these, see how we're rolling here. And we're just hanging in the middle. We might pop back up to the, I mean, it's entirely possible we pop this to the top or, lower high yet again before we roll down. We're probably set to roll down. Whether we do it from here or do it from over here, we're gonna come back to the bottom. It's like, how am I so convinced we're going to have a correction? Because stocks above their 20-day. We were at the top. The next move is to go back to the bottom. When we're at the bottom, the next move is to go back to the top. We did that. So the next move is come back to the bottom. S5FI, which is stocks above their 50-day. We were at the bottom. We came up to the top. We might hit the top again. It's entirely possible. We push this up just slightly higher high. Maybe, if we touch 90, it's almost guaranteed we're getting a correction. Almost guaranteed. Anytime we touch 90, guaranteed for at least some sort of correction. And that one dropped, got really deep, came back up, and then went to the bottom. Took a year, but we got there. This one was at the bottom, was down almost to zero. It was at 4. Then we shot right back up to the top. Coming back to the bottom. Just how long does it take? S5TH, which is stocks above their 200-day. I mean, we're hanging at 50%. So this is not, when you look at it, most people consider stocks to be bullish when they're above their 200-day. Right now, we're looking at 50% of the S&P 500 is still not above their 200-day moving average. That's just crazy to me to think about. And then NDTH NASDAQ stocks, we actually pushed this up a little bit yesterday. We're getting a little more participation. We were hanging at 50 here also. All of a sudden, we got a little more participation in the last 2 days. This one also likely to reverse. And we were at 20. Do we take it back to the top? I mean, this usually takes a while for this to happen. So, NDFI, NASDAQ stocks above their 50-day. We're up here at the max on the 50-day. We might spike 90, but we're already running in the red line here. Higher high. Probably coming back to the lows. Right there. And when you have, to me, this is funny. You have 100 stocks, right? NASDAQ 100 stocks. How do you get 85.14? How do you have a 0.14 when you have 100 of something? It's either 85 or 86. There's not 0.14. I mean, it's either 85 stocks or 86 stocks are above their 50-day. It's not There's not a 0.14 of a stock when you have 100 stocks. I don't know. You tell me. I don't know. It seems like some crooked math going on there. But, I digress. That's just one of those weird market things, I guess. NASDAQ here pushing up through. Can we stick it? Can we stick above that downtrend? Or is the downtrend actually off the highs? And we actually just tapped it. Tapped it there, tapped it here, rejecting. It's a good question. I don't have a good answer. Trend lines are the weakest of technical analysis. If you got any feedback, let me know. Like Russell here, tapped the 618 this morning. If you don't have that September protection or something even further out, might be a good opportunity. CL. Yeah, that's what I wanted to see. Looking for this to hit that roadmap line. USO getting into the roadmap line. Then UCO. I'll put a 23. Oh yeah, we might get that supercharged alerts trade closed out today. Beautiful. Gold, I'm very leery here. This is a setup for a large correction. Came up, lower high, lower high. First move down, retrace. Next move down, potentially put us down in here. At the minimum, it puts us down to this vicinity right here. And if we get the extension, could be as low as that. So looking for something in this zone right here as the target. Ideally, I want to see something down here, but we may stop right here and turn bullish. Silver, probably done on, it's either done or near done on this move. We're probably going to see it come back like this. That, if that corresponds with the gold pullback, that's a buying opportunity in gold and silver. Interesting. This one, not stopping. If you don't have a piece of this, you might want to consider something. The target on this baby. There's the low, there's the high, here's the low. We could be looking at something like right up in here. Not too shabby. Not too shabby at all. Platinum ETF. There you go, PPLT. If you want some potentially ride along with, you can buy shares of PPLT here. Got that move up. We got that retrace. Potential move up to from where we at here? 116 to like 160. $50 upside potentially. Something like that. And that was on the list, funny enough. And circling back around. Let's see. I should put index BTC on the list instead of the futures. I'm always looking at this one anyway. Jumping back over, checking her out. 110. Now, really odd to me yesterday was all the financial, mainstream media, financial people that came out announcing Bitcoin was ready to go to 130. I mean, one, that's not even technically really on the chart from this current move. Two, when they all come out, something's up. So 113 to 115 would be where I expect if we're just going to break out right now. First move down was 5 waves. This kind of no subwaves. A third move put us down in the 96 area. If we look at that, that's back down around the roadmap line. So that's first move down, retrace, lower high, next move down, potential right down in here, 96, 98, somewhere in there. Be careful out there. If we get extensions, possibly down to 94, 92 on Bitcoin. Index ETH, all time. Yeah, we actually popped out of the consolidation yesterday. Can we stick it? I am very concerned that we're just retesting this over here. And we might see a pullback before we can go higher. I'm long Ethereum, so I mean, don't give me that I'm super bearish. I see the dangers in this chart long term. I keep talking about the potential downside. It's because that's a lower high. That's a lower high. Lower low is usually what we get when we see this kind of pattern show up in the charts. This one, BM bullish. If we can stick this break back above, if we can break back above that high, we might lead to a breakout and then just take everything enthusiastically back higher. It'd be kind of beautiful, but also really scary. Irrational highs usually lead to devastating corrections. I've played this game. I've been doing the stock market game since I was in 3rd grade. I've watched so many corrections. Dollar, if this is a consolidation before we get the extension, hunting for this target right back down here, somewhere around 97.50. If we hold the higher low and break higher, roadmap line would be the resistance we got to get through. Right there around 102 to 103. Got to get through that before we lead this to something bigger. So slice through that daily roadmap line. Haven't even retested it one bit. Right there on the dollar. Mag 7 stuff, Apple, just kind of like shrugging. Not even blinking right here. Their new iOS, all sorts of memes on the internet about that. Memes, whatever you call them. It's kind of like they adopted the, I don't know. It's like they made their interface all weird. Is the stuff I see. So, I don't know. That's the big upgrade, some sort of clear icons. Amazon, grinding a little higher, still in this danger zone. First move down, potential for the next move down. Nothing really changed. Apple has that first move down, potential for another move down. Nothing really changed. Google, same situation, first move down. Grind in that 618. Potential for another move down. This is what's scary. Like when you look at the potential for a correction. Meta has it. Although they keep pushing a little higher, a little higher. When would I be convinced they're not going to do the correction? At a new high, basically. And then it basically resets this and we can do it all over again. Nvidia, first move down, potential for another move down. Same thing. Tesla, first move down, potential for another move down. But you're looking here, holding up really well. Videos of driverless cyber taxis showing up on the internet yesterday. Interesting. Tomorrow, supposed to be the day that they roll out public ability to hail a robotaxi. We'll see what happens here. Robotaxi is the software, not the car. They're currently going to roll them out on Model Ys, the new Model Ys. And then at some point down the future, they'll roll out the Cyber Cab, which is the actual car. So robotaxi is a software. You can hail a driverless car, and you may be like, well, there's no way I would ever ride in one. You should ride in a full self-driving vehicle. Just go book a test drive and try it out. Like, it's kind of crazy. All right. I go pull all the gainers. Things moving $2 more up in the pre-market. Put it on the gainers list. Things moving $2 more down in the pre-market. Put it on the decliners list. We look for opportunities. That one's played out. Ooh, correction here. That has this setup. 75% likely to go up to 379. GE Veranova, consolidating here. This may be the retest of the breakout before we push this higher to 568. ASML. Ooh. Running a little spicy, running a little faster than I would love to see this. Find a top, retest one more time, similar to what I drew over here, and then get the bigger potential move up that can take us big picture up here to like 1,000 new highs. So I want to see that one more time because we've got a 1, 2, 3, 4, 5 up, retrace back to the vicinity of the low, and then set up the bigger breakout. QBTX, that's 2x on QBTS. QBTS looks like it needs a correction, so be careful on QBTX. IONX is 2x on IONQ. IONQ, potential to go on up to, that's a weird, I wonder why I did, oh. Yeah, that's weird. So IONQ has this potential to pop into this zone up here. It's got 75% likely setup, but it also could do first move down, second move down, like all those Mag 7s. First move down, second move down. Save that. Just be careful. I'm not jumping into that one right now. Rambus. Skipped a bunch of stuff. Let's go back up. CoreWeave. Yeah. CoreWeave gonna keep being crazy till the bubble pops, and then so we'll come up here, some unknown price, then we'll start doing this, and then we'll do this. How do I know? Because this right here, like we get CoreWeave is the hot one right now. It used to be NVIDIA and SMCI. People talking about it. I hear people that don't know jack squat about stocks talking about Circle and CoreWeave and some of these opportunities. And I gotta tell everybody I gotta tell everybody. I'm so enthusiastic. Once that reaches maximum investment, maximum suck in, we get this corrective chop right here. You start hearing people, oh, it just needs to cool off a little bit. We've had this before. We're going to get another run. And then it breaks back down right there. Probably going to happen right here. Probably going to happen. Nope, SMCI. This one right here. We had that. Crazy enthusiasm. People talk about, just need to cool off, run higher. And then just need to cool off, we'll run higher, but that time it didn't. We ran back to the bottom and still likely to extend one more time down to the bottom 2 years later, or year and a half later. NVIDIA hasn't cooled off yet. It went on that run, went on the rip. Could we go higher still? Yeah, we may or may not be done here. This could be doing that. Since there's a lot more money involved, we could do this consolidation out here a little longer before we take the money back. Maybe like, there's no way. That's the biggest company in the world. Well, look, we've done these giant pullbacks in the past. Let me show you. See this one right here? 67% pullback. Right there in 2021. This one right here in 2018, 57% pullback. Roll back. I mean, we had some nice big fat pullbacks, but roll back some more. Another big fat pullback. Right here, 2007, 8, 9, 84% pullback. So you don't think NVIDIA can pull back? Well, this time's different. 90% pullback right there in 2002. And this time's no different. There's no different in the market, all right? This time is never different. This time is different just by the prices. So be careful. It's your money. You can do whatever you want to. First Solar, I'm cautious here. This 3-wave up, maybe that's a 4 and we get a 5. If so, that'll start changing my opinion that we need a pullback and a pop higher. Right now, at this lower high, has potential to extend lower. I'm staying far, far away right now until this adds some clarity to the chart. 2x leverage on. There's another one like IONX, PPLT, Platinum. Already went through that. Large upside potential in this one. Somewhere in that 170 area, maybe even higher, 200. Could see RH here. Be careful. Sledge, if you still got it, we can break out to new highs, but right now we're under the daily roadmap line, and it can very, very easily reach down one more time to that lower target right around 89. VST, 75% likely, 224. RGTX, 2x on RGTI, RGTI. This must be cloud computing or quantum computing stuff. And that is a correction that Wicked first move down. Next move down. Potentially back to 450. Palantir, we saw that one flash across with the alerts. Got close to the target right there. 137.70 was the actual target. So check some of my alerts. Which ones? Let's see. I want to see ones that hit. Price alerts. And PLTR MU. Let's go check out MU. Oh, breakout, baby. Let's get that going. It sets up the bigger potential for 200 on MU. MCD. Ooh, MCD. Down below the roadmap line. Yeah, no change for me on that one right now. Sell the calls. Yeah. Back to it. And yeah. Reverse split. That's danger. Danger, danger, danger. Don't touch that one. Reverse splits are not bullish. Never are. And that basically puts it on the do not trade list for me. 245 on TSM. Likely to be the upside target. LEU at the target. Watch for the pullback. Korea. Bulls. Boy, this thing just ripping lately. I had a reverse split, so gotta use your own discretion here. These prices are multiplied by 3x. It was pretty devastating, that pullback right there. Logitech. Nice reversal. Missed my target just a little bit. And we're just stuck right here in this consolidation that we've had for 2 years. So nothing clear there. It can easily complete this pattern where it first moved down. Now, this has been something cooking since 2021, so for a few years now. And that can easily be the target right there. Funny enough, I had one drawn right there. It's kind of funny. So watch for that extension on Logitech. Builders first source. Potentially working on a bottom here, or working on a consolidation before another extension. It looks like a 1 2 1 2 3 4 3 4. And this could take a little while before we finish this up. In home builders, same situation here. 1 2, and it looks like we got more to go on Nail. So we got more to go on Toll Brothers. More to go on DR Horton. And Fastenal, though. Different story here. Going for the target, 43, 44. DR Horton was on the list. And Dave & Buster's, nice little pop. Reported earnings. Missed on the top, beat on the bottom. Yeah, some food stuff seems to be turning around here. This very deep. If it can maintain that, we could be looking at a rally from 30 to 160. But we're going to have to stick the landing above the roadmap line. I'd love to see this come up into that resistance, retrace, hold the support, break through, and get some bullish action going. Ouster at the target. SOXX. Ooh, be careful. Nearing the top of that consolidation. INSM. Hit the targets. DPST. Coming into that resistance. If we can break through, that'd be bullish. FAS. And not really breaking out. FAZ. Not really doing anything either. Boring. Nail. Like I said, that looks like it might extend lower. Why do I say that? Because the way we broke down, and we don't really have a clear finale to that correction. This is 3x leverage though, so be careful on leverage. And Urban Outfitters. If this big picture plays out, we could see 126 up there. Energy at targets. Watch for a pullback. Sale. Steel 30. Oh, is that the right thing? No. That was not the right thing. Sale port, not enough candles to do anything with. Could be coming into resistance here. Maybe give a shot at the all-time high right there. 26. I wouldn't mess with it though. Not my bag of potatoes. I am long MUU. Look at this big picture pop. Might throw that out for our supercharged alerts right there. Ugly. This is ultra gold. Likely to bring it back to the roadmap line right there. GDXU. Same thing. Back to the roadmap line. IONQ. We already talked about. Has that potential. Rambus. Unclear. LIBU. Bearish under the roadmap line. ETHU, bearish under the roadmap line. Although I am bullish on Ethereum if this can break out. Sezzle at targets, but has this bigger upside potential to get up into this crazy number up here, 300 to 400, maybe 500, 600. THI, roadmap line resistance, probably still got downside to go. QTUM. Quantum computing ETF might be heading up to 95. Decliners is usually where we find some opportunities. Lucky Martin, hunt for a low. Might push one more low, but if you're looking for something to sell puts on, this might be a good one. THC. Watch for that to come back down to the roadmap line. Got really close to the target. May get some extension up to 180 though. AMSC. Back to the roadmap line. American Semiconductor. GitLab. That sure does look like we're going to push a lower low right there. Now, this could be 5 up complete. This 3-wave retrace, a little deep. If we pop back up above this, probably going on up. Let's clean up some of these and kind of discuss where that might put us. It's actually, I actually like this pattern right here. It's a measured bounce pattern. Puts the potential for this to come up into the 62 area right up here. If we get above here, something like that. GitLab. New, that's a bearish 3-wave correction into the roadmap line. Extension lower would be what I expect. That low, that high. Somewhere down around 90. Chewy coming back for the roadmap line. That was the target. Jill. How low does she go? Looking for this to potentially hold this low. Retest and or hold that low. Could go slightly below it. Be careful out there. GGAL. First move down, look for another move down. And Steel Dynamics. Just chop. It broke higher, retested, moved up, did not get continuation, retested again. We need this to get going. But, you know, years long consolidation. It's not able to break out so far. 2 years of just sideways chop. All right, I have some setups. Let's see what we got here. This one's shown up a few times lately. It's like 85.74 targets. Turn on the statistics. Yeah, that one's pretty spicy. Still spicy. Evergreen. This one was in from back here. Still spicy. Still looking for 71.60. Coca-Cola. And back here, just set up another little baby bounce. And 75, still the target. Oh, there's the entry there. 61.75 likely. And PG and 1. Ooh, that's a little baby. Little baby bounce. There. Potential for 24.25 on that one. So bias for the day. Watch for that extension up to that 60.60 target. And we'll see what happens. We could get some resistance up there. If we slice through, like a ninja with a razor blade, 61.20 would be the next upside resistance. So these are the upsides I'm watching right here. And we may run it right up into FOMC next week before we get a bigger downside. Be careful out there. We'll see you again tomorrow morning. Same bat time, same bat channel. Come see me. Be careful out there. You catch the same